Welcome everybody to QB Power Hour. Today's Thursday, November 1st, 2018. And today's the first time we do a pre-recorded simulcast. Basically means that this episode was pre-recorded and we are running it live on the standard QB Power Hour date because it happens to be that yesterday, October 31st, I received a scary phone call, no pun intended, from the IRS changing an appointment I had for 8:30 a.m. to 10:30 p.m. Eastern Time. And I know for a fact that I will not be able to be sitting in front of a computer doing this episode live. So I decided to wake up really early in the morning and record the episode and set it up in a simulcast. We'll see how many people watch it. We'll get the feedback later on to see how good it is. One caveat about today's episode is there will not be any CPE. We have no way to monitor interactions and questions and that sort of thing. So if you're here for the CPE, if you're a CPA or a certified bookkeeper and you only come to QB Power Hours because you need the continuing education, I apologize. Today's episode will not be giving any CPEs. Anyway, today's episode is value pricing, specifically creating accounting service packages and pricing options. We'll speak briefly about QB Power Hour, our sponsors, the host. We'll talk about the CPE process, which this particular episode doesn't have any. And we'll discuss the main topics. We'll spend about an hour talking about understanding how to have that value conversation and how that derives the information that we need in order to construct our accounting service packages and the pricing options that we give to our customers in a fixed fee engagement. QB Power Hour is a webinar series that runs live with the exception of this particular episode every other week. Our next episode is actually going to be next week, November 8th, where we're going to be talking about Avalara and we'll be doing a demo of TrustFile, one of their applications and services that they have for sales tax. We typically talk about 50% QuickBooks Online, 50% QuickBooks Desktop, but from time to time, we'll veer off QuickBooks and we talk about practice management topics or third-party apps. In today's episode is fully a practice management type topic. Michelle Long, my co-host, she will not be doing the presentation with me on this episode, but check out her books in Amazon and check out her accounting VCon and the LinkedIn group that has over 160,000 members. About myself, my name is Hector Garcia. I'm a practicing CPA. I do mostly training and standard accounting services such as monthly bookkeeping, accounting, tax. So a lot of the stuff that I'll be teaching you would be from my own personal experience. There's my email. There's my Twitter handle if you need to contact me or ask me any questions directly. About the CPE process. So normally QB Power Hour will have a CPE process where people answer polling questions. Today's episode will not have any CPE because this episode is pre-recorded and is run live through a simulcast. So no CPE will be offered. We'd like to thank Avalara for sponsoring our webinar series for the rest of the year, the most popular app and service to manage multi-state sales tax compliance. Check them out at avalara.com. Okay, let's get started. So we're going to be talking about 5 different things. One is we'll talk about some of the basic components of a pricing options spreadsheet. So I have my own spreadsheet, which I'm going to show you how I put together and how I use it in order to present my services to my clients. So we'll discuss the components of it, like what should a spreadsheet or a template of any sort when you're presenting pricing options, what should it have in order to be effective? Then secondly, we'll talk about scoping options. So we'll discuss a little bit about what questions we ask along the way in order to scope options. But we'll have a much bigger focus around service delivery options. Now, service delivery options are things that are not in the scope, but they change the experience of the whole engagement. Then we'll talk about how to build a pricing option spreadsheet using something that I call the value matrix. And this will make sense once we cover it. And then we'll talk about a couple of next steps and how to get some of the templates that I have as a free download. And optional, you can opt in to take my free in-depth course that goes live tomorrow, Friday, November 2nd, between 12 p.m. and 3 p.m. that will be live, and that's a premium paid course. Most of the stuff that you need will be in this webinar, but it'll be rushed because there's just a lot of content. And if you want a webinar that's a little bit slower, that goes more in depth, that includes all the templates, at the end I'll explain how to get into my paid premium course. All right, so in your handouts, in the email that I sent with the handouts, you will see a PDF of a pricing sheet. It's an example of a pricing sheet that I put together for monthly engagements. And I want to break down all the components that you see. So first of all, of course, it needs to have a title. So we call it fixed price monthly accounting services. I never use the word value price to title a option spreadsheet. So definitely don't even think about using value price. That's just confusing for the client. Always use fixed fee or fixed price. I like price better than fee, just because fee sounds like a penalty. But it's up to you. Really depends on how the client takes it. So, I call it fixed fee monthly accounting services. I always put customized for and put the customer's name, because I want the customer to get the feeling that this is not a standard price that everybody gets, that this price was thought just for them. It was designed just for them. I also notice in the area under the company name, I also put an expiration date. I think it's just really important to know, when the spreadsheet was put together, when the pricing sheet was put together, and also how long is it valid for, right? Is it valid for 30 days, 60 days? Because their company situation could vary. This customer could grow 2-3 months later and their circumstances are different. Or you as an accounting firm could also change. A price that you give to someone in November may be a different price that you give to someone in February, just because you're busier in February and you may not be able to take the client immediately. And all those things vary. So we do have to put some sort of time sensitive to it. Now on the right, I put my company logo. You can put whatever you want, of course. But then the really important piece is you want to title your services. You want to give them a name and you want to give them a description. Some folks use really creative names, especially niche practices that work with a specific group of customers in a specific industry, and they use terms that makes more sense for them. I like to use generic accounting terms. Notice that I packaged my services as outsourced bookkeeper, collaborative bookkeeper, and strategic accountant. Now, I do use the word bookkeeper on the first two and use accountant on the third, because when I start offering services that are more CPA-like, and by the way, if you're not a CPA, you can also use the word accountant in certain states. I know some states have limitations of how to use that word, whether you're going to have to call it something else. But I'm a CPA, but not everything that I do in my practice is a CPA quote, a CPA service. So at any point I want the client to feel that this is an accountant level service, I use the word accountant. You choose, depending on your practice, what makes sense for you. But notice I use the three words: outsourced, collaborative, and strategic, because I want automatically for people to think that on my first option, that means they're throwing work my way, I'm taking care of it, so they don't have to touch it. Then on the middle one, I'm using the word collaborative because it is implying that we're working together. And on the last one, using the word strategic because the strategic meeting and the custom reports tend to be the highlights of those three. So it makes it very easy for the customer to start understanding right away what the services are just with the titles. Then the descriptions take it one step further. Notice that outsourced bookkeeper says we do it for you, collaborative says we do it together, and strategic says we support your growth, right? So the description plays alongside the service title, and that's really how you start putting that together in the customer's head, so they start kind of understanding that. Then the prices are right on the top. I'm a big fan of putting prices in the top. Some folks say the prices should be on the bottom. I think that people want to look at that price right away, even if it's scary. I don't care. I want them to see it right away because I want them to start just kind of drawing conclusions in their head about what level of service they want to be on or what the service implies. I want people automatically to think that the middle one and the highest one are expensive, but that's just how I do it. And I'll discuss later on why I do good, better, best, not best, better, good, because some people, some of the pricing gurus say that you should have the highest in the front and then the lowest at the end. I like doing it this way. There's a very specific reason why I like doing it this way. It's because I like to, in my presentation, I build up, and that's just the way I do it. And then notice that under the pricing, I have a special space for me to add the one-time fees that could potentially be added to our monthly fee. So for example, let's say I met this client in August, right? So this is the 8th month of the year. And I'm offering a bookkeeping service, a monthly accounting services from August forward. But after reviewing my client's books, I noticed that there's some cleanup or some adjustments that need to be made for the first 7 months. So in my monthly services, I also include my price quote for the back-end cleanup work. And I say, look, we can take the lowest engagement, but you have to pay $750 for me to catch you up for the year or clean you up for the year, whatever happens to be. And don't get caught up with the numbers. The numbers could be anything you want. This is just an example. Or if you pick the middle number, that's the middle package. This is a really important piece. As the clients pay higher in the package, I lower the one-time fee for cleanup because I want customers to get what I like to call membership value, where they feel that as they are members of a program and they go up in the tier in membership, they also get better discounts or better access to services that other people won't, or better pricing to services that other people would pay a lot more for. So I show that right away on the one-time cost, and notice that on my highest package, I will do the cleanup work. I will basically eat the time and the cost of doing the cleanup costs and not charge extra because, the client is signing up from a highest tier. I normally require the client to pay the first 2 months in advance in order for me to do that. That way I can take at least 2 months worth of the monthly strategic accountant service for me to afford to be able to do the back cleanup at no cost. Okay. Then notice that there's two areas. We have the service scope features, and then we have the service delivery options. So most accounting professionals are stuck in scope, right? Where what I'm going to do is going to change how we're going to price my services. And for the customers, that makes sense as well. And this is where we use a basic table of features with check marks so people can see, where, which package gives you the most services. One thing I want to make sure that you notice is that in the lower package and the middle package, there's a lot of things that we don't do in a monthly service, but we will do it in an annual service. So for example, in my lowest package, in this particular customer for this particular case, I don't do monthly depreciation. I don't review accounts receivable. I don't review accounts payable. I don't adjust inventory. But at the end of the year, I'm not going to send this to the tax preparer, assuming it's a tax preparer outside of my firm. I'm not going to send it without those adjustments. I will still do it one time annually at the end of the year. So I want to make sure that also customers don't feel that we're completely neglecting a really important piece of the service, which is making those annual adjustments. We're just making it a point that that's not part of our monthly process. And you notice, if you look at fixed asset depreciation, receivables or payables, notice that then that's included on the middle service. The other thing that I do is I price my additional services up front. So I immediately tell the client what payroll will be for and sales tax will be for, assuming that I do those services. So I put them in my price sheet. And I also, if you notice, sales tax is going from $215 a month to $150 a month as they go higher in the tier. Because again, is that membership value. I want my clients to feel that when they're in a higher membership, they get access to additional services for a lower price. Then we have things like including HubDoc, right? Or including the QuickBooks Online subscription. So we pay for it in a wholesale type package, or the annual tax return. Also notice that on the annual tax return, it's an optional service. But again, if they're in the lower package, they pay $650, or in the middle package, they pay $400. In the highest package, it's all included. Now, again, don't get caught up with the numbers. This is just an example for one particular case. Your pricing may be different, whatever, whether it's the packages, the cleanup, the payroll, the sales tax. Don't get too caught up with, that's a high number, a low number. I'm showing you how you would construct it, and you would plug in the numbers that would make sense for you. And you would plug in the services that you do and you don't do. This is just an example. And in the email that I sent to everybody, it's a PDF of this, so you can print it. You can see exactly how I put that together. Then in the bottom, we have the service delivery options, which we'll get really in depth on. That's the experience around the service, not the specific thing that we're going to do, but how the customer is going to consume or see or interact with us while we do the work. So we'll go into detail on that. I just wanted to at least cover the basics of putting a package presentation together. I believe that this is a good one to use. I have used it for years. It's worked really, really well for me. So I'm exposing, how I do it with my clients. I'm sure this will be helpful for you in one way, shape, or form. Okay, so let's move on to, so let's take a step back, right? And let's talk about what are the questions, or what does the conversation look like with our client before we put this pricing package together. And the single biggest, most important question that I asked, especially as I transition my services from hourly to value, and this is something that has helped me immensely over the years of this transition, is to ask the client, how important is it for you that we give you a flat monthly fee instead of an hourly rate? I ask that because if my client tells me that they don't care about a flat monthly fee, that they enjoy or want an hourly rate, then it becomes very difficult to sell value, extract value, or understand value, because the customers only look at the hourly rate as an inference of value. And if the customer wants to pay the hourly rate, then your discussion is just going to be about the hourly rate. And don't waste your time, trying to put together a flat monthly fee if that's not valuable to your customer at all. Now, at this point, you can have a conversation and try to convince your client that this is a better way to go. But this may be a rhetorical question. I think for most people that would say, yeah, I want you to give me a flat monthly fee that I can afford. Most people say that. I mean, in my experience, people say, as long as you give me a price I can afford, that would be great for me. Or as long as it's a price that's within my expectation, that would be great for me. That's the type of answer that you get. All you really want is the customer to tell you, it is important or somewhat important for me to give me a flat monthly fee. That way, you're framing the conversation around, my job is to give you a flat monthly fee, which means we have to spend some time understanding the scope of work, right? So I think it's a great question to get started with. I think it sets the whole thing up. It creates a framing around why you're having this conversation, etc., etc. Okay, so let's talk about, and I already alluded to this before, the difference between the scope options and the service delivery options. Scope is, are we going to enter the data? How much detail? Are we reconciling the banks? How many banks? How many transactions? Are we reconciling loans? Are we adjusting invoices? Are we adjusting accounts receivable? That's the scope, the specific things that we click on and adjust, and the type of number of transactions, type of transactions. That's the scope. And believe it or not, that's the stuff the client cares the least about. We care about as an accountant because that's what creates volume of work, right? That's what will either take 20 hours to do or 5 hours to do, correct? But the service delivery options is what the customers value the most. So what I like for you to do is to leverage service delivery options more than scope. Scope is important, but sometimes you can build enough margin with service delivery where scope creep doesn't become an issue. So we'll discuss that. But the service delivery option is, as I mentioned before, how the customer experiences the work that you will do, not what the work is, right? Most people don't care about what the work is as long as they get the results. That's what service delivery options means. So let's go deeper into what that conversation looks like, what the value, scope, and service delivery discovery process looks like. So try to use, so this is an overarching example. So try to use these modifiers or this way of questioning, whenever your customers are not being very clear for you about whether what you're asking it's something that's important to them or not. In other words, when you tell someone, hey, would you like us to check your invoices? And they say, yeah, I guess that would be nice. That answer doesn't work. Like, we need to know if it's valuable for us to check the invoices. Is it valuable for us to reconcile the accounts receivable? Is it valuable for the customer to make sure that we match payments with invoices? Is it valuable for us to give the client a report of AR aging that shows all the invoices that are coming due or that are probably old or duplicate? We need the client to tell us, yes, this is valuable for me, or this is very valuable for me, or not so valuable for me. This is important for me or not too important for me. This is high priority or not high priority. So as you ask these questions, you don't want to get just simple yes, no answers from the client. You want to dig a little bit deeper and understand how valuable, how important, what level of priority, because your clients will never give you a numerical dollar value of of any of these scope items. Like, they're never going to say, yeah, sure, if you can reconcile my credit cards, I will gladly pay $200 just for that. Or if you can reconcile my receivables, I will gladly pay an extra $300 just for that. Customers will never talk to you in those terms where they specifically quantify the value of the work and attach a dollar value to that. That's our job, right? We're going to have to do that. But the only way we can do that is we have to infer it based on priority, value, and level of importance. So we're going to get into that when we talk about the value matrix. But this is the overarching sort of follow-up questions that you want to keep in mind whenever you get a very blah, very simple answer from the client that doesn't seem to give you everything that you needed. So let me give you some examples of really good questions to ask in the scope options. And I'm going to skip, how many bank accounts, how many credit cards, how many checks. I'm going to skip that stuff because that stuff, you know that, right? And we'll discuss it briefly, but I want to tell you the questions that most of you probably not asking. So hopefully they'll be valuable for you. So what type of work you don't want us to do, right? What type of work you don't want us to delegate. So the question is, what type of work you don't want to delegate us to do? What is the type of work that you are going to do, you're only going to do, and you don't want us to do? So typically a customer may come back to you and says, well, I don't understand the question. What do you mean? And then you can come back and say, well, like, for example, do you want us calling your customers that haven't paid you to try to collect? Or is this something that's very delicate where only an in-house employee should be doing? And the customer will tell you, no, for sure, I'm the one that's going to be talking to my customers. I'm the one who's going to be sending past due invoices. So that's the type of work I don't want to delegate to you. So we want the customers to immediately tell us what is it that they don't want us to do, so we can specifically include it in our engagement letter, in our fixed price agreement, that this stuff is excluded, explicitly excluded. And we need to know right off the bat what we're not going to do, so it doesn't come back as a surprise later on, or the customer made the assumption because we didn't discuss it that these are things that bookkeepers or accountants do anyway. So I really like this question because it's creating that line in the sand, that stark differentiation between what is it that they do, what is it that we do. Now, questions like how many bank accounts, how many credit cards, of course you want to know that, you want to ask that. But the way I like to ask it is, who will enter the bank transactions? Who will enter the credit card transactions? What, as mentioned earlier, what type of work you don't want us to do? Do you need us to add additional memos beyond what comes from the bank? I think that's a really important question, just because sometimes what ends up happening is you get information from the bank, but the information from the bank, it's missing certain things, and then your customer sends you maybe a spreadsheet of some sort explaining to you what is what, and then they're expecting for you to transcribe those memos into QuickBooks. That would be extra work, and it's important for you to ask this up front, right? So do you need us to add additional information beyond what comes automatically from the bank? Then we ask, do you need us to be adding class, location, customer job info, if this customer needs that type of work, Or is this something that you're going to do? And should we schedule some training to show your team how to do that? We have to, right off the bat, know whether or not this is something the customer expects us to do. We will say something like, who will reconcile the loan balance, right? So if you have loan balances or intercompany transaction balances, who's going to reconcile that? So automatically I say who, because I want the customers to automatically say, no, this is my part, this is your part, this is my part, this is your part. And because I'm a training company as well, every time the customer says, I will do that, I will do that, I will do that, I put that into my potential training bucket. And before I serve my engagement, I say, these are all the things that you said you were going to do. I want to make sure that you know that if you need us to train your team in these things, this is the fee for training. And if it comes up during the engagement that you do it wrong or you don't know how to do it, we will automatically offer you this training package that will teach you how to enter the part that you said you wanted to do. Remember, the customer may have their own reasons why they want to do part of the work. This is not just because they're trying to save money. For their specific reasons why they want to control a certain part of the interaction. And this is especially true with QuickBooks Online customers that feel they have access to the information and they should be having a collaborative type of service. Now, who will create the initial chart of accounts? And again, it's okay for your customer to say, well, you dummy, you're the accountant. That's fine. It's okay to ask that, right? I mean, if the client says, I don't know what the initial chart of accounts is, it's a great question, because then we can say, oh, let me explain to you what a chart of accounts is. And then you can start getting into real conversations about what's important, what matters, what doesn't matter. But I think a really good question, a follow-up question is, do you want us to be maintaining the chart of accounts consistent throughout the engagement, which means we have to, at all times, make sure that you guys are not creating new accounts, deleting duplicate accounts, merging accounts that are redundant, or do you believe, because you foresee changes in your business, for us to be dynamically changing that chart of accounts and having a monthly review with you to make sure the chart of accounts displays all the information in the exact order and the exact way that it makes sense for you. So that's a great, who's going to create the initial chart of accounts and who's going to maintain the chart of accounts consistent throughout the engagement. I think those are great questions to ask. Another interesting one to ask, and that we're still on the scope side, do you want us to include open invoice balances, vendor bill balances, inventory balances, and any prepaid income and expenses in the book as part of financial statement preparation, aka do you want us to keep an accrual basis financial statement? And granted, a lot of clients will tell you, what? I don't understand. We are cash basis. This is too complicated. Look, you'll feel it. Like as you talk to the client, they may immediately tell you with how they're explaining to you how their business works that they don't need any of this stuff. So you don't have to ask it. You don't have to ask it. But if you start talking to the client and they're talking about receivables and payables and open invoices and all that stuff, then you want to ask, do you want us to include that? And the reason why this question is valuable is because if the customer were to pick a lower service, one that didn't include any of this stuff, then they would give us this number to plug in at the end of the month, right? So that means that they would have their own spreadsheet or their own system to keep track of these things. And this would be a great situation to discuss this. If the client tells you, no, my expectation is I want to keep track of all these things in QuickBooks while you do the banks, then you know that we're definitely going to be doing a collaborative type of service, and we have to include in our scope the fact that we're going to be doing cleanup after the client's work. This is just part of our business, right? If we're collaborating and we're allowing the client to touch QuickBooks and make changes, they're going to be making a mess of our work as well, and we're going to be cleaning up there. So we have to include all that stuff in our services without telling the client that we're going to be cleaning up your work. You don't have to tell them that. Just know it, so you price it accordingly. Okay. A couple questions. These questions are crucial for the top tier type of service. Do you want us to create a budget, and do you want us to give you budget variance reports? Okay. Do you want us to create a forecast and monitor performance? Remember, creating a budget or a forecast, it's worthless if people are not reading the reports, looking at the differences, and acting upon the differences, creating action plans on the differences in performance or variances on the budget. So getting yes answers to these questions means the client is asking you to get involved in helping them grow, in helping them understand, in helping them improve their cash flow, all of that stuff. So do you want us to create cash flow projections? And if the client doesn't know what this means, you can have the conversation and say, yes, this is what a forecast means. This is what a cash flow means. You want to ask, this is a crucial question. Do you want to have monthly strategy meetings to review your financial goals, that they're on track, that they're being met? Now, everybody's going to say yes to this. This is a great example of how we go back. Let me go back to that slide real quick. We go back into this slide, right? Everybody's going to say, yes, I want to have monthly meetings. But then that's what we say, how valuable are they? How important is this? How do we prioritize it if you have to choose between this and some other big thing that they're asking for, which is more important? Because everybody wants to say yes to all these things, but then once you price it, then magically they don't want to say yes to these things anymore. So not just getting yes doesn't mean the client later on is then going to agree to pay $3,000 a month for a sort of strategic accounting service, right? It doesn't mean that they are going to say yes once you give them a price. So keep that in mind, that just getting a yes is not enough. We follow that up with how important is that if we have to prioritize between this thing and this other thing, which one is more important? And that's really what becomes valuable in the long run, to know where the client's priorities are. Do you want us to book monthly depreciation or annual depreciation? Who will calculate the depreciation, right? So are we waiting for the tax accountant to send us the tax return for us to plug depreciation, or do you want us to keep a depreciation table separately, right? And again, some clients will say, I don't know what this means. So if they don't know what it means, it's probably not important to them. So don't spend too much time highlighting that you're going to do this. This is a big mistake that accountants and bookkeepers make, is they sit with their client and they brag about all the things that they're going to do. And you realize later on that your clients don't give a crap about any of this work. Like, you'll sit there and do this beautiful depreciation table where you took 13 assets and depreciated each one. And then you tell the client that you did this, and the client says, I don't find that valuable. Or they'll say, they might even tell you those words. So I think it's just good to have these conversations up front. And if it doesn't feel important to them, then don't spend too much energy doing that. That way you can prioritize in other things that do add value. A couple of other questions to ask is, do you need us to review your invoices that you create every month? And that's if they tell you that they are creating them. So you want us to sit there, look at them, and see if there's potentially some gaps, to see if the items you're creating are pointing to the right accounts, to check for sales tax, that sort of thing. Another question is, do you need us to make sure that your customer payments are being applied to the invoices correctly? A lot of customers may tell you, no, that's my responsibility. I don't need you to do that. Or again, you may get that rhetorical yes. And then, if they're saying yes to everything, then make sure that you only add, all those services to the highest option. But you have to gauge it in some way, shape, or form. Try to gauge how important this is, or try to infer, how messy is it going to be. I know it's hard, but having this conversation may open up for that, right? Because then you can start asking, well, how many invoices are you having, or how many are open, or how many payments are you receiving every month, that sort of thing. Same thing with vendor bills. Same thing with making sure that the payments are being applied to the correct bills. And this may require us to get statements from our vendors and reconcile those. So great questions to have, to ask, to have that conversation. Now, if there's inventory, right, you will ask, who will track the inventory value? Again, this case, I'm not saying, would you like us to track the inventory value? I'm saying who, because sometimes some questions when you say who, you're implying that this is a customer side responsibility, right? Do you need us to help you with the physical inventory counts? Again, because I'm also implying that this is a customer side responsibility. I'm just saying, hey, should we include a physical inventory count quarterly, monthly, annual with our engagement, so we physically go on site and help you with that? How often do we need to enter an inventory, a cost of goods sold adjustment? Again, assuming it's an inventory type client. Who will reconcile intercompany loans? Again, or not just who, how, right? What documents are you going to give me because you have another company that's moving money back and forth. What type of information am I going to have handy to understand what's the deal with this money coming in and out of this other company, right? And if there's petty cash, right, how will we reconcile petty cash, cash on hand accounts? Right? Again, how? You're asking the question how. The client may come back to you and say, well, you're the accountant, but what do you mean you're asking me how? Well, what I mean by how is, what information are you going to give me? What does your petty cash log look like? How do you internally record monies coming in and out into your safe, into your cash register, that sort of thing. Then when the meeting questions, right? Do you need to meet in person during this engagement? So do you need us to meet in person, right? The client may say, no, remote is fine. So that's good. I just want to have those conversations immediately, because those meetings are probably the most expensive things that we have to do, right? We have to get out of the office. We have to completely disconnect from everything. We have to schedule them if the client is running late, if there's traffic. I mean, those are the most time-consuming and most unproductive hours that we have in terms of the time that we can spend in our office doing other things that we do. They could also be at the same time the most valuable part of the client engagement. What the client values the most is that in-person meeting. So it could be both the most expensive thing for you and the most valuable thing for your client, which in this case is great. But I think it's good to ask up front to make sure that if the client doesn't value this, why even waste your time doing it? Then questions like, how often or how long do you estimate these meetings to be? Now, the client may come back to you and say, well, you are the expert. You tell me how long they are. And then you can say, well, for example, I had client XYZ that was about the same size as yours. We met once a quarter. Our meetings were 4 hours long. We reviewed A, B, and C. And the last hour, we basically looked at reports and talked about budget and forecast. And you just use examples, and the customer goes, yeah, that sounds about right. And then if that's important to them, you say, how important is this for you? Would you like this? Is this a minimum requirement? Is this a must do? Or is this something that we can maybe give you the option to do it or not do it? That's when you start gauging how important that is. Again, because to me, in-person meetings are the most expensive thing. Who will manage payroll? Right, great question to ask, right? Who will manage sales tax? Again, if they have payroll or sales tax, who? Again, I'm not saying would you like us to, I'm saying who, because I want the client to say, no, I'll take care of it, because I love clients that do their own tax and their own payroll. I also love the clients that want to pay for it, but I want to make sure the client's telling me, I want you to do it. I don't want people to assume that I do it. I want them to say, I want you to do it. That way I can say, because you told me you want me to do it, here's the price, right? So we want to use the answers to construct our offering. Do you require us to do any specific customized reports for your management in a monthly basis, right? So you want to use an example, like for example, is there specific information in QuickBooks that you've inputted, whether it's items or quantities or notes or custom fields or whatever, in which you feel that we should put together a report that filters your data in a certain way to give you specific information about your operation where you can make better decisions, right? Job costing reports, open back order reports, things like that are things that we could come up with this. Again, your conversation flow will tell you whether or not this is a good question to ask, and you will have hopefully you have good enough understanding on the industry. You could use some examples as well. I asked, would you like us to bundle QBO software with your service, or apps in this case, if you also have apps? Would you like us to bundle it? So that means that would you like us to take care of that cost as part of the service, so you don't have any other cost other than our service accounting related, right? So that's an important question to ask. Then I'll ask is, if you do taxes, right? If you do income taxes, would you like the price that we give you to also include the income tax return? Again, because you want to pay one monthly fee and you don't want to get a separate fee invoice for the tax return, right? So I asked that. Sometimes they say, no, I understand tax returns are separately, invoice me separately, or I'll do the taxes somewhere else, whatever happens to be. Okay. And if there's other apps, I ask, hey, what other software packages do you want us to integrate with QuickBooks? Now, I know that a lot of times it's up to us to suggest those integrations, but I ask for it just in case in their mind they have they're thinking about integrating XYZ, and they tell us up front instead of them just doing it willy-nilly without asking us and making a big mess, or again, assuming that this stuff should have been included in our monthly service in the first place. Now, I really like this question, and I typically save this for my second or third tier type of service, is would you like us to respond to third-party contacts as your accountant on file as part of the engagement? So for example, if your lawyer calls me to ask me a question about your books, or your banker, or a partner, or an investor, is this something that you want us to send you a separate bill for, hourly rate, whatever it happens to be? Or do you feel that us being your accountant on file should include any third-party request, which of course you will authorize beforehand? But my question to you is, do you feel that throughout the year, anyone else that we talk about your books outside from you and your management team, you believe that all those conversations should be part of the engagement, or you think that it makes sense for us to not include them in the engagement and charge you separately for them? And again, the customer will tell you, yeah, no, I think, I don't want to pay for it because I don't know if I'll ever have this. Go ahead and charge me separately when it happens. Or they say, no, my expectation is, as my accountant, you should be available for any third parties that have questions about the books. Again, these are things that a lot of times we don't bother to ask. And I've made it a point in the 10 years of practice to write down all these things, because almost every client is a new learning experience. And every single client that goes wrong, where something was misunderstood, I add it to my list of questions to my next client, right? So that's how I kind of build intelligence around putting packages together and interviewing my clients. And I love this question. I heard a rep from a software company ask this question not too long ago, and I added to my presentation here. And you're going to love this. Do you prefer the flexibility of monthly payments or the savings from annualized payment? Do you prefer the flexibility of a monthly payment or the savings from an annualized payment? So I love this question because it automatically frames that the customer will have the ability to pay for the whole year up front and save some money. Most people, when they hear from their accountant, pay me for a whole year up front, they're very reluctant towards that. They're saying, wait a minute, why would I pay the whole year up front? Even if you were offering a discount, it just feels weird. But when you say, would you prefer the flexibility of monthly payments or the savings from an annualized payment? If they tell you, I prefer the flexibility of monthly payments, don't even bother offering an annualized payment. But if they tell you, how much are the savings? I would consider an annualized payment. Then that's an option you can offer, right? A deep discount for paying for the whole year up front. And that's beautiful for cash flow. And once the customer pays you, then you're not so worried about doing extra work and that sort of thing, because you got paid. You got paid up front. So it was a great thing for your practice. Another good question to ask is, how often would you like to have conversations with our bookkeeping team, right? Or with accounting team? Or how often would you need to have conversations with our lead accountant, with our CPA, with our tax preparer? Just ask this. How often would you like to have conversations? Because a client may tell you at least once a month, or a client may tell you whenever I have a question. And if the client tells you whenever I have a question, that means that their expectation is that anytime they want to ask a question, you need to respond, right? And that's we're gonna talk about options briefly. We're gonna give an option for quick response and for slow response, and people need to pay more or less for that sort of thing. And this is what we have conversations about. How quickly do you need us to respond and that sort of thing. How important is it that we prioritize your work the first week of the following month? Now, I think it's important to frame it that way, because everybody wants their work ASAP. Everybody wants first of the month, start working on my file. The problem is it's not sustainable for us to deal with 50 clients and do everybody the first week of the month. So we have to prioritize, right? And the customers that tell us it is very important that you're done the first week of the following month, those are the ones that we're going to give a premium price for. And they're the clients that tell you, you know what, third week, fourth week is fine with me. Then we know that we can't offer a priority service because they're not going to value that. So it's a really great question to know whether, because you got to be able to bucket your clients in, look, 25% of your clients will be done the first week, 25 will be done the second week, 25 will be done the third week, and 25 is the fourth week. That's just how it works. If you're going to do all your clients in a month following the closing month, in theory, you can only do, the first 25% on the first 25% of the time, and so forth. Now, some of you maybe can finish all your clients by the 15th or by the 21st, but then you'll figure out how this works. But no matter what, if you're breaking down by weeks, there's a group that will be done the first week and a group will be done the second week, and so forth. So we need to ask, how important is it that we prioritize your work the first week? If your client says, it's important, but I could wait, then you know that you can offer both options. If the client tells you it's very important, then you may have to offer across all your options, for it to be done second week, and then maybe the highest option first week. So you could play with that. Now, this is a really important one. When you have an accounting or tax question, how fast do you expect a response from us? Now, that's an important question because I've had clients that I didn't take because they have told me within 48 hours. And I know I can't respond within 48 hours. I know me. I know my business. I know how long I take to answer questions because I'm busy or because I research my questions. So if my client tells me 48 hours, I say, how important is it that we answer in 48 hours? And then some people tell me non-negotiable. It needs to be 48 hours. Then I'll price it so high that if they say yes, then I can make some shifts around my business to make this work. But I'm probably going to price out of the range just because I can't deal with 48 hours. So a lot of people just say 48 hours, but once they say that, look, it'll cost you $5,000 more for that type of service, they say, you know what, magically 72 hours is fine or a week is fine for me. So how will the response be? So does it have to be a phone call? Does it have to be an email? Does it have to be a text message? Does the email itself have to be a memo with background, with disclaimers? Like what type of response are you looking for from us? Then I love this question. I think this question is so important. What can we do or forget to do that would immediately terminate a relationship? I love this question. You will be surprised how many different answers you get with this. Like I had one client to say, if my ex-wife finds out how much money I make, that would automatically terminate the relationship. Now that's something, it never even crossed my mind that I would divulge information to their ex-wife. But it's interesting to see what are the things that they value. And from here, there will be, you can infer a lot about, what else you can offer. So someone can say, if my information gets out and anybody else reads it, then they would value some sort of smart vault, high security portal. They don't want documents via email. They don't want you to text passwords, stuff like that. So whatever the answer here is going to give you so much valuable information about what they value that you're going to be able to create so many options just around this one question. So I love this question. To me, this has been one of the best questions and this is my own question. There's been a couple of iterations of this, but this has been, to me, my favorite question that I have created from my interviews. Now, this couple questions are also valuable. Do you anticipate any major changes in your business in the next 6 to 12 months? Now, some clients don't know. Some clients will be guessing. Some clients will be lying to you. And some will tell you, yes, there's this thing happening or this thing not happening. And the reason why you ask this is because the length of your fixed price agreements, right? If you make them a year, 6 months, or 3 months, and you commit to doing that work for that flat fee, it's part of the risk to the accountant. Because if you look at a current client situation and it significantly changes 6 months later, and we have committed to do the work no matter what for 12 months, then we have a bigger risk factor. So questions like, how often would you like us to review the engagement? Or how often would you be comfortable for us to sit down and discuss scope and pricing? Your customer tells you 3 months, 6 months, a year. That gives you an idea of how flexible you can be with pricing, right? It is, if your client tells you every quarter, I'm okay with reviewing and repricing and rescoping, then your risk level is only 3 months worth of work. So that's a really important question to ask, because it's really the time of the fixed price that creates the potential scope creep risk. So the longer you price your services for, so a whole year's worth, the higher the price premium. That's an important one to keep in mind. Most accountants think the opposite. They're like, oh, the client is committing to 12 months. I can give him better price. No, it's actually the opposite. Another question I like to ask is, would you like us to proactively train and support your staff? Proactively is the key word. On technical aspects of your accounting or accounting software as part of the engagement. In other words, are you expecting you and your staff to get progressively better at record keeping, accounting, bookkeeping, QuickBooks, whatever? Are you expecting that as part? Are you expecting your entire team to be elevated from the perspective of organization, paperwork, accounting, bookkeeping, financial literacy? Is that part of your expectation? Because you want training is the most valuable thing you can do for your clients, and you should never train for free. Never. I mean, a bookkeeping service has nothing to do with accounting, bookkeeping training. Most of us spend tens of thousands of dollars and years to learn how to do what we do, and our clients expect that information to be transferred for $300 a month? Absolutely not. All right. So do you expect us to do this? It's going to be part of the price will include that service. Now, I love this question for collaborative services. Would you like to know what you did wrong, right? Or what we're adjusting from your work? It takes a long time to pull audit trails, to run the P&L and balance sheet before you touched it and after you touched it. All that stuff takes time. If your client values that, then they'll pay for that, because that's part of their learning experience. So if you're out there correcting clients' work and the client wants to get a list of everything you corrected, it will take extra time to do that. But if the client says yes to this, then maybe you can include this on the high service, but not on the low or the middle service. Would you like us to pre-negotiate a lower hourly rate for out-of-scope work? So listen to this, guys, and I know some of you will not be happy about this. I still have an hourly rate. I'm a value pricer. I fix price my projects, but I still have an hourly rate because there are some really quick, really simple out-of-scope work that I like to be able to price without having to spend an hour to give someone a price for a $100 service. So I have my standard hourly rate of $250 or $350, depending on the client and the situation, and I pre-negotiate a lower rate for maybe $150 or $100 an hour for things out of scope once the clients are in my system, paying a fixed monthly fee for whatever service it is. So I pre-negotiate lower rates if that's valuable for the client, and that right away implies that we will charge for out-of-scope work. So I love this question because it kills two birds with one stone. One, it tells the client, yes, I would love to pre-negotiate an hourly rate, which they're agreeing to, and also they will ask, well, what kind of work is out of scope? You want your clients to ask you what kind of work is out of scope. You want them to be proactive about this instead of us reacting to their request. So I love this question. I think it's a bombshell of a question. Would you like us to include a set of hours of out-of-scope work as part of the engagement? In other words, would you like us to not even send you bills for out-of-scope work for 4, 6, 8, 10 hours a month, so you can, and it all pre-priced in our services, so you can feel free to just send us out-of-scope stuff, to just send us stuff that, your overflow, whatever happens to be, and you have prepaid a certain set of hours, and we'll let you know, hey, by the way, we're using 5, 6, 10 hours from the out-of-scope bucket for this. And this is really nice because a lot of clients say, yeah, I would love to not have to get an invoice and be nickel and dimed for everything that I do. I would love to just get just built in a bucket for all those random requests that you think are out of scope, but you go ahead and just consume them as part of the engagement. This is, you can equate this to the old cell phone plans that had minutes that you didn't consume on the month and they would roll over, this is what I call the rollover minutes, right? These are the rollover out of scope work hours, right? People prepay for these hours as part of the engagement, and they have them as a bucket and they can consume them in any way, shape, or form. They want us to go talk to the lawyer. They want us to represent them in an audit. They want us to do some reports for the workers' comp audit. Whatever it is, it's all prepaid for. It's already preset. It's in there and it's ready to be used at any point in time. Do you need us to guarantee our work to the point that if you get audited, we will represent you in the audit, right? And is that audit representation going to be beyond 3 years, right? So on my highest package, I include audit representation, which basically means that I will give them all the documents that an auditor may ask for. That's really all it means. It doesn't mean I fight for to lower the taxes or anything like that. It just means that I'm there to aid on the presentation and preparation of documents in audit only for folks that pay for the highest service. If they don't pay for the highest service, then I charge by the hour for that. And I only cover that for 3 years. And if the client says, I want you to go the full 7 years, I add a premium to that. So it's just an idea of something that we do, assuming you do audit representation work as well. Another question asked is, do you need us to have a portal where all your documents are readily available for you to pull and retrieve, and returns, reports, or is this, or do you want to just be having to keep your own copy of your document? So I ask this because I don't want customers to expect that they can email us and ask for documents that they need ASAP at any point in time. We're not their secretary keeping paperwork. We say, would you like us to have a portal for that? Is this valuable for you? And we charge for that, right? We pay for the portal, so we charge for the portal. We add that as part of the engagement. And if we disengage, how would you like us to give you a document? So sometimes people say, I want you to print everything for me. So I pre-price that. I say, our disengagement pre-printing service will be $500. Whenever you disengage, just let us know. We'll send you a $500 invoice. I include that in my agreement, and we'll print everything for you. Or someone will say, just send me a zip file or save it on a USB drive. I pre-price that, right? I actually, the way I put the documents together for the client to make it easy for them, it's part of the disengagement, right? And on my highest service, I don't charge. But organizing documents is really expensive. So I have to charge for that. Now, it doesn't mean that I won't hold back any documents, because as an accountant, I can't hold back documents, right? But how would they like them? That would be important, because I can give clients documents in whatever way I want, and then I will be in compliance. But if they want them in a certain way, printed, USB, organized by folder, whatever, on a portal, transfer the portal to their name, whatever happens to be, I pre-price that or preset that expectation up front. Now, this is another really good question, and to me is the bombshell of a question when it comes to value pricing. How important is it that we guarantee our work in such a way that if you're ever dissatisfied, we refund the last payment you made, we have a clean break, no questions asked? How important is that for you? So the client may come back and say, that's really important, or they may say, no, I don't think I will ever be dissatisfied or ask for a refund, or whatever. These are the things that you can ask, because a lot of your clients are coming from other accountants, right? So if they're showing dissatisfaction with the other accountant, you can say, hey, did the other accountant offer you clean break? Here's your refund. You can go somewhere else. Because you want to take that risk away from the client of feeling the anxiety that, man, if it doesn't work out, this is going to be a pain. So if the client says, I will love this, I will love a great exit strategy. So if it doesn't work out, listen, I just tell you, give me my money back for the last month or whatever happens to be. We'll have a clean break, and there's no drama around changing accountants. So if your client tells you that's important to them, then a value guarantee or a guarantee of this sort could be offered at a premium. All right. So let's talk about the value matrix. So I'm going to step out of the presentation here for a second. And this is a spreadsheet that I sent to everybody on the email before the presentation started. And this is basically a spreadsheet that mimics the stuff that's on my template. Okay, so you can see things. Let me zoom. I'm going to zoom this in 150%. So questions like, what type of work you don't want to delegate to us, right? What type of, who will reconcile the bank statements, and who will do the chart of accounts, and will there be accrual basis reports? Will we do budgets? All the questions that I have on the questionnaire that I mentioned, and also the items that will be on the spreadsheet, on the template. I put them on a spreadsheet like this, and what I do is I'll take notes on each box, on each answer, and then I'll put here whether this was a minimum requirement. So if the client says, yep, this was a minimum requirement, or they may say, is the most valuable thing you can do is reconcile my bank accounts, or someone that says, modifying and maintaining your chart of accounts is high value. So I come in here and they'll say that budget and forecast is no value, whatever happens to be. So I annotate in terms of, what's high value, what's low value, what's a minimum requirement. That's a really important thing, and some notes on my conversation. And then I take this value matrix, which is basically the preset recording of the questions that I ask my client with the answers, with their determination of what's valuable, what's not, with their notes, right? So I use this as a template to then, and I have two tabs here, scope options, and then we have service delivery options. So, third party, let me zoom this in as well. So, you want us to be a third party contact, are 30-day terms valuable for you, or do they want to pay annually, monthly? Do you want us to, how often do you want to meet with the accountant? All these questions that you're going to later on translate into, let me pull up my template now so you can see it. They will translate into this template. So you want to design a template that contains line items that mimic the same questions that you ask, and you can put them together in a value matrix like the one I made, gave you as an example. You can put it, and then you'll know whether something is a minimum requirement, low value, or high value, or whatever it is. So anything that's, let me go back to the other one. So as you get the answers of the value matrix, you're gonna see things that are no value. You're gonna see things that are minimum value, high value, low value, whatever happens to be. Anything that's a minimum requirement, that's gonna be in your first option, right? Because it's a minimum requirement. I can't, the client told me that reconciling the bank accounts was a minimum requirement, or whatever it happens to be, right? So we gotta find out what's a minimum requirement, what's not, and that's gonna be in the first option, and obviously it's gonna be across all the options. Anything that's the most value, when they tell you that's the most valuable thing for me, or that's a really high value item for me, those you're probably gonna reserve for the last two tiers. And anything that's low value or no value, you're probably not gonna include it, or you'll gauge whether or not you will include it in one of these options. But from the things that are a minimum requirement and most value, you probably want to include one or two here in the outsourced bookkeeper, or whatever your first tier is. So minimum requirement and highest value, at least one or two, they need to be on the lowest tier. But then the rest of the high value stuff needs to be in the second and third tier. So this is just a way you can record the answers, take notes, and put them in what I call a value matrix. Because when you were asking questions like how valuable it is, how do we prioritize? Let me go back to that slide real quick. So when we were getting answers to the questions, we were following up with how valuable is this, or how important it is, or should we prioritize this over that, or if we had to choose between A and B. So these follow-up overarching questions that we asked after all the other questions, they're the ones that are going to let you know what's more valuable and what's less value. Again, none of the conversation that we'll have, they will ever tell you numerically what each of those things should cost, or how much are they valued to them. All you will know is whether they're high value, low value, and where they reside in your pricing options. Then to figure out the price, that's something that you're gonna have to do, with your feelings and your experience. That's how you're gonna do it. Now I'll give you some overall techniques. What I end up doing is I always figure out my lowest one first. I believe that's the most important one, because you need to have a walk-away minimum, right? Like, I'm not gonna serve this client unless I get at least this much under this minimum type of service. So always figure out the first one, and that's not difficult. In my opinion, that's not difficult. Most of you will know exactly how to come up with that number. Then the second one and the third one, I used a simple formula. I duplicate the first one. So you see here, we duplicate it and then take away 10%. So I don't make it quite double, so I make it almost double, but not quite double. That way, it doesn't feel like the next tier is double the price of the first one. And then do the exact same thing with the third tier. I multiply the first tier times 2 and take away 10% and multiply times 0.9. So that's my formula, more or less, that none of these by itself become double the lower one, or the lower one is not less than half of the middle one, right? So this gives you I think this is a really good formula to keep the numbers tight. In this case, we're going between 375 and 1250. These are pretty tight numbers because the highest tier, it's about 3 times the lowest tier, right? It ends up working out like that, between 3 to 4 times. It never gets quite to 4 times. And the second tier is almost double the first tier. So I think those are good numbers to have. You could figure out your own formula for that. I don't think there's a hard and fast rule for that. Now, a couple of features of my template. I'm going to show you real quick. I'm going to do a print preview. When I do a print preview, this looks like this, right? You always make sure it's only one page. So when you build your own templates, never do something crazy that's multiple pages. Everything should be self-contained within one page. That's an extremely important concept. The other one is, the way I build my template is I make option 1 and option 2 collapsible. So what I do the first time I meet with a client is I offer my highest option by itself. And I say, look, I'm going to show you a matrix that shows you all three options, right? But before we go there, let me tell you optimally what would be the best case scenario, how we can do everything that you said yes to, right? So you want to start there, because you just spend an hour or 2 hours with your customer asking questions, and they answer yes to a lot of things, and they want just a clear answer. How much would it cost me for you to do everything that I said yes to, right? So you want to offer that by itself, and you want to say, look, this is, yes, best case scenario, everything we spoke to, this is what it is. And then you immediately have a second printout that shows all three and say, and by the way, these are all the other 3 options I want to show you. So you want to show the first one to create the frame. You want the customers to feel the third one is expensive. It's really important for customers to feel it's expensive. It's not necessarily that they need to think it's unpayable. It needs to be payable, but they need to feel it's expensive. But you may also use it. You can use a very easy transition. To me, it's the best sales technique out there, is to say, by the way, if you're not ready for that, we can evolve to that eventually. Here's my other options. So you don't want to tell the client that this is too expensive for you or you can't afford it. All you want to say is, it's a timing issue. We'll get there eventually. Let's go for a service that you can afford now, help you grow, help you get better, and then we'll look into that. You want the customer, even if they can't afford it, to always feel that they're working towards that. Okay, just like frequent flyer miles, people always want to get to that super executive platinum level. You don't get that right away, but you don't want people to feel bummed out that they can't. You want them to feel that there's a pathway to get there. And you can say, hey, maybe we can work a year or 2 under option A or option B. And then later on, when it makes sense, we can, at any point in time, you can come back to us and say, hey, I think that third tier would be great for me. So you also want people to, it's good if they don't choose that third option, because it keeps them wanting more. It keeps it interesting. It keeps them thinking, hey, my accountant or bookkeeper can do a lot more than what they're doing now. And eventually we'll get there. So that's what I like about the way I put this template together. Again, this is like 6 years of finagling with the spreadsheet and moving things around until I got to the point where I got, what I think is a perfect spreadsheet, at least for my business, for my services. And you can add and remove lines here and that sort of thing. So that's how this spreadsheet has worked for me. And my suggestion is that you build your own, right? Build your own from scratch. Utilize all the tools that I've been giving you, all the suggestions, and you build your own. So on the resources page, you can go to hectorgarcia.com/value. You can download the value matrix and you can download my questionnaire. But the template itself, I don't give away just because the template itself took me so many years to put together. That's something I feel I don't need to give away, but I've had people see my presentations and say, I'll buy it off you, and I just came up with a price. So if you want to buy the template by itself, there's a link on the slides. You can go to the link there, pay $50, and I'll send you the Excel template. Again, you can build your own. Most people know how to use Excel. They can build their own. But if you want my template, there's a $50 price tag to that. And if you want to attend my course on Friday, November 2nd, 2018, it's a 3-hour webinar where I'm going to do the same presentation, but in a slower way. And we're actually going to modify the template itself. We're going to move lines around, and we're going to get deeper into the actual value matrix, how to, what type of notes we take. We'll talk about that value conversation in a little bit deeper way, and I'll give you some additional techniques on presenting and pricing and option creation. So that's going to be a 3-hour webinar on November 2nd, Friday, November 2nd, 12 p.m. to 3 p.m. Eastern. If you want to sign up for that, sign up, go to valuepricing.net, use the coupon POWER200 to get $50 off, and the course will be only $200 instead of $250. I've sold about 12 or 13 seats at $250, so people are buying it, people are seeing value on it. If you happen to be watching this and you already bought at $250, just email me and I'll give you the $50 credit, because this is a brand new coupon that I've never given to anyone out there. So just use coupon POWER200 if you sign up, and you'll be able to attend the paid webinar on November 2nd, 12 p.m. to 3 p.m. Eastern, live on this topic. You will get a copy of the template as part of the signing up for the webinar. And if you can't attend the live, but you do pay for it, I will have the recording available for you, and you can watch that recording anytime, together with about 8 more hours worth of classes that I have there. So it's not just a 3-hour webinar. I have a different webinar I did about 2 months ago that I went 5 hours long, and I talked about the value pricing model, and I talked about how to add value, and how value is created and all sorts of things. That stuff is on the portal, and you can watch that. That's already pre-recorded. So you'll have access to the live webinar. You can ask me questions live on Friday. You can watch the recording afterwards on top of watching, and you will have access to about 8 hours of pre-recorded value pricing techniques or topics. And I do throw a value guarantee on that. My value guarantee is that if you're halfway through the webinar, or even if you end the webinar and you're not happy, just email me. I'll give you a refund, no questions asked. The same way I treat my clients, where I get value guarantees, refunds, no questions asked. I will do it with you. So if you're like the webinar, just I'm way out there, exposed on the internet. I'm not gonna offer a guarantee that I won't hold up for. So you pay the $200. If it doesn't work, we'll give it right back to you. So the coupon has been extended. It's open until November 2nd. So you just you type POWER200, go to valuepricing.net, sign up for that, and that's it. Thank you very much for attending the simulcast of QB Power Hour. We went a little bit long. We didn't go live as normal. For the folks that went all the way here, thank you for watching the whole thing, even though we went way over. And I'll see you November 8th, which will be the next regular episode, back live, back to normal with CPEs, where we talk about Avalara using the new their trust file app for sales tax compliance. And then we'll get back to 11/15th. We'll do a post QB Connect show. We'll talk about what's new with QuickBooks Online, QuickBooks Online Advanced, and what's new in the QuickBooks Online ecosystem. And then we'll be back in an every other week schedule. Again, thank you very much, Avalara, for sponsoring QB Power Hour. Check out avalara.com for sales tax compliance. And thank you very much. Join the Facebook group. If you have any questions, comments, concerns, email us at qbpowerhour@gmail.com. Thank you very much.